This is the SPDR S&P 500 Trust ETF, otherwise known as SPY. As of the day I'm writing this, SPY is worth about $500 billion, or roughly 1% of the entire US stock market. This is one of the most commonly traded assets in the world. There's a decent chance, if you're one of the 3 people that watches this channel and has a job, that you have invested in this. It is quite literally the most boring and risk-free investment that exists on the entire stock market. That is, with one little caveat. There are 11 random millennials somewhere in the country whose identities are mostly unknown that need to stay alive to keep SPY on the stock market. Exactly 20 years after the last of those 11 millennials is dead, SPY will be dissolved and all $500 billion will be wiped off the market forever. Why? Well, it's kind of a whole thing. First, let's use our time machine to do something really lame. We're going back to October 19th, 1987. The stock market has just crashed. It's not entirely clear how this happened. It might have been the introduction of computerized trading systems, it might have been the slowing of US economic growth, it might have been something Iran did, or it might have just been God's way of punishing America for handing over control of the CIA to the professor from Bedtime for Bonzo, but for the sake of this video, it doesn't really matter. All you need to know is that the stock market was looking real bad, and the SEC had 800 pages of stuff to say about it. Again, most of what they said here doesn't matter at all. What we're interested in is this little observation they made right in the middle of the report. Basically, they realized that you could trade lots of different things on the stock market. Entertainment companies, beverages, cemeteries, or even a random deli in New Jersey, but you couldn't buy stock in the stock market itself. Anyone could see how well the market was doing by looking at something like the S&P 500, an index that tracks 500 of the biggest companies on the stock market and turns them into one number, but you couldn't invest in that number. The S&P 500 isn't a company, it's just an equation. If you wanted to trade the stock market on the stock market, you were out of luck. Asterisk, asterisk, asterisk. Anyway, the SEC decided that this would be a good thing for people to be able to do. If investors had a way to trade diversified baskets of stocks all at once, maybe the market would be a little less volatile and a little more awesome. So they put out a call for someone to figure out how to legally make a company that could essentially mimic the behavior of the entire stock market, and this is where things get weird. Over in New York City, there was a stock exchange. Not the New York Stock Exchange, mind you. I'm talking about the American Stock Exchange. If you haven't heard of it, don't worry, because not enough people used it, and now it doesn't really exist anymore. At the time, however, they were still very much in the process of trying to not stop existing, so they got to work figuring out how to create a mini stock market that people could trade on the stock market. After a lot of tinkering, what they came up with was this. They would buy stocks from all 500 of the companies tracked by the S&P 500 and put them into a trust, kind of like the thing your parents give you if they want you to be unemployed but in a glamorous way, and then let people buy and trade shares of that trust on a stock exchange. For the most part, this worked perfectly. The value of this trust would track the value of the S&P 500 almost exactly, but there was one giant problem. The trust needed to have an expiration date. Legally, it couldn't exist forever. There's something called the rule against perpetuities, which exists in a bunch of different legal systems to prevent dead people from deciding how the economy should work. Only nearly dead people should be allowed to do that. Things like wills, deeds, and yes, trusts are all required to have expiration dates so that the people who created them can't keep controlling the assets for centuries after they've died. The thing is, these rule against perpetuities laws are usually written in a weird, vague way where the expiration of a trust doesn't have to happen when its creator dies, it can be when anyone dies. In the case of the state of New York, trusts expire 21 years after the death of any number of named people, as long as you can prove those people existed when you created it. Fun side tangent, and I promise this is kind of related, this is the same reason why when Ron DeSantis dissolved the autocratic government that Disney had been operating in Central Florida for 5 decades, Disney was then able to effectively overthrow the government of Florida by declaring a corporate reign that legally lasts until the last descendant of King Charles III dies. That's not a joke, by the way. That's actually how this part of Florida works now. Anyway, the good people at the American Stock Exchange now had everything they needed, except for babies. They figured that if they pegged their trust to as many babies as they could find, not just one baby, because that baby might fall off a cliff, then the trust would comfortably last at least a century, and that would be good enough, I guess. So they went out and started collecting babies, children and grandchildren of people who worked at the exchange, or people who knew people who worked at the exchange, and eventually they had a pile of 11 fresh-faced tots whose lives they were willing to bet the future of the US economy on. Though they didn't realize it at the time, the trust they created would eventually grow to become one of the most important assets on the stock market. And that asset is still tied to the lives of those 11 babies. Like I said before, not much is known about them, but a few of them have been tracked down over the years. There's a guy named Paul who works as a bartender in Philadelphia, an Atlanta-based engineer named Elizabeth, a New York-based salesperson named Emily, and a woman named Rianne in Birmingham, Alabama, who listed this gorgeous KitchenAid stand mixer on her public wedding registry, and I, for one, hope that she gets it because love is beautiful, and also she's almost single-handedly propping up the US economy by not dying. Now, is this all scary? Yes. Do they have a solution? Kind of. Theoretically, they could just make a Spy 2 and start shifting assets over there when it looks like the last of the Spy kids are gonna kick the bucket, but that assumes most of the 11 are gonna die in a relatively predictable way sometime many years from now. So I guess what I'm trying to say is, maybe, just maybe, you should think twice before you hit a random millennial with your car. Now, look, I know this video was a confusing bummer, but don't worry because I'm about to tell you something way worse. While you were watching this video, your name, address, and social security number, your demographics, your online shopping habits, and a whole bunch of other information about you were being stolen legally by data brokers. And I'm sorry, I should have told you about that earlier, but we're talking about it now. There's a whole industry that revolves around stealing your data and selling it for profit, but fortunately, there is a way to protect yourself. It's our sponsor, Incogni. Now, Incogni works in a pretty interesting way. For those of you who don't know what data brokers are, they're basically for-profit organizations that scrape the web for personal data and then take all that information and sell it to, well, whoever. Incogni reaches out to data brokers on your behalf and keeps your information out of their databases. They automatically deal with objections, follow up if more of your data gets added, and monitor multiple broker sites to keep you in the clear. Doing all that manually by yourself just one time would take years, but with an Incogni subscription, it'll be handled constantly, automatically, and with no effort from you beyond signing up. If that sounds like a good deal, sign up for Incogni today and use code HALFASINteresting at the link below to get an exclusive 60% off an annual plan.